Welcome all to the House of Blockchain series by Prysm Group. I'm your host, Guido Molinari, managing partner at Prysm Group. Prysm Group is an economic and governance consulting firm. We provide clients with expertise in incentive design, token economics, and governance related to permission and permissionless blockchain. In this series, the House of Blockchain, we will be exploring the leading projects in the space through our house framework many of you may already be familiar with. The house framework shows the key components for blockchain economic design. It is my pleasure to welcome for today's episode Sam Pajot-Pips, who is the Head of Strategy at the Open Application Network, the OAN, and VP of Growth at Moves. The Open Application Network is a public infrastructure that creates a new design space for open applications. Open apps are programs that put users back in control and are universally accessible across online platforms. The OAN runs on AON. As the native digital asset of the Open Application Network, AON is used to secure and access the network. The OAN has recently launched its flagship open app, Moves, a mobile app designed to support the ongoing progress and social mobility for gig workers. We are going to be discussing with Sam both about the OAN, AON, and Moves. Welcome, Sam. How are you today?
I'm great. Thanks for having me.
It's really a pleasure to have you here. And, in this episode, as mentioned, we're going to be thinking about both, the protocol you guys have been working for now several years, but also the recent launch of your flagship app. And with that, we have talked before, there's been a bit of a shift in the overall strategy of your firm. And thinking about this, through the framework of our house, how do you say you guys got to sort of this move up the stack, as you define it to me in our previous conversation? And what motivated this shift in focus in terms of the strategy for your firm?
Yeah, that's a great question. I think it kind of speaks to the value proposition piece of the house here, which is, like you mentioned, AON, the original name from the project, it was kind of the all-encompassing name. We launched in 2017, and the first version of the network went live in April of 2018. And kind of during that time, I'd say our focus was very similar to other kind of public chains at that period of time, which was providing kind of an open source development environment for anyone to kind of come in and build anything they want. And I think that was kind of a common go-to-market theme for a lot of the protocols at that time, and still continues to be kind of the go-to-market theme for other networks as well. And during that time, we had many projects approach us, we had many applications start getting built, and things were somewhat successful and things did work well in certain avenues, but it became very clear that what we really needed to do as an organization is really go in a vertical approach and build an application, an open application that can actually highlight how this technology can be used. Because without kind of a focus for the technology, it kind of becomes everything to anyone and also almost nothing to everyone as well, because it's a little bit unclear what you can use this for and what are the types of projects that should start building on it. So we spent the last really 2 years in that kind of go-to-market strategy of working with many projects. We had some succeed, some fail. We had obviously the macro conditions of kind of the crypto market impacting a lot of these organizations as well that were building applications. And we ended up realizing, well, maybe what we should do is kind of build this ourselves to a certain extent. Is we know this technology the best, we built it, we understand what its value propositions are. And let's kind of go out into the world, the kind of real world today that we see in terms of online platforms, and solve a very specific problem that exists there today. What we had noticed for a lot of other public chain networks was a lot of focus on kind of a 10-year vision. And I think it's great to be aspirational, but there was a lot of rebuilding things from the ground up. Let's rebuild Uber, let's rebuild YouTube, let's rebuild all these things. And there definitely are concerns with these current designs, but there's also an opportunity to kind of improve on what currently exists. These are multi-billion-dollar organizations that have amazing network effects, but there's also an opportunity to start improving them and moving them towards a future that is more equitable or more fair for its participants. So that was really the goal with the Open Application Network, is to start leveraging these existing platforms with network effects, find discrete opportunities within those platforms and their stakeholders, and start injecting the technology of blockchain, but also the economics at play with crypto assets, and start solving some of these problems. So that was kind of the focus that we started looking towards in late 2019. And then that really culminated with the launch of Moves beginning of this year, and then its first product going live in April, which was targeting in on the gig economy and some of the structural challenges that are happening there.
Mm-hmm. And Sam, can you tell me, I'm sure a lot of our listeners are working, as you mentioned, the strategy of many protocols of sort of being a layer to then add other people building use cases is still today an ongoing strategy. But you guys, went through the process of thinking, what are the key use cases that we could build, and what is the the killer app in a sense, right? And you guys selected Moves. What was the process to get to selecting Moves? So like this, basically financial platform for gig workers. Did you guys started with many different use cases and look at different criteria? Was there a particular, did somebody from the gig economy come to you with the idea? How did you guys ended up with this use case as the first one selected?
Yeah, it was quite a long process. It really kicked off in, I'd say, November of 2019 when we launched the Open Application Network. And the Open Application Network was effectively a rebrand and a refocusing of the technology. And we launched a thesis at the time, which was around the unintended consequences of platform economies, was what we called it. And we really looked at what are some of the kind of largest, most entrenched internet companies today, and what are the dynamics that exist within their platforms. And this isn't news to anyone. There's a lot of interesting kind of stakeholder misalignment issues that happen within these major platforms, whether you're looking at Shopify and its online merchants, or you're looking at YouTube and its content creators, or you're looking at the gig economy and Uber and its drivers. We noticed that there was this kind of recurring theme of stakeholder misalignment, and we saw blockchain as a technology and crypto assets as kind of a new tool in a toolbox to maybe approach that problem in a unique way. And instead of it being a platform like Uber or a platform like Shopify kind of solving or attempting to solve that problem on their own, maybe there's the opportunity to introduce new kind of neutral infrastructure into play that serves as kind of a common good for these stakeholders. So that was a very kind of high level thesis that we wrote out, and it kind of served as a kind of a prism by which we could start looking at the world from. And that's where we ended up looking specifically in the gig economy. So in January, it became quite obvious that there were some big macro shifts happening in the gig economy with, first of all, in California with AB5, and that's continued to progress over the last kind of 6 to 9 months. And then in Canada, there was a major platform called Foodora that was going through a unionization effort. Mm-hmm. So it became very clear in the mainstream that there was a kind of a boiling point happening here between these individuals that were providing supply into these ecosystems and the platforms themselves, and then the regulatory infrastructure around them. And that just kind of got us really excited when we started breaking down all these problems. And one of the major problems that we noticed in that stakeholder misalignment was because of the nature of a gig worker being an independent worker, not being employed, it makes it very, very difficult for them to interact with the traditional financial ecosystem. Mm-hmm. Simply the fact that you are not employed and potentially new to the country, or have had challenges with like your credit score in the past, mm-hmm. these kind of structural elements, including the volatility of your income, made it really difficult for you to access basic financial products like affordable credit. Mm-hmm. So because you were kind of this independent worker, you were effectively left on the fringe of the traditional financial market. And we said, well, maybe there's an opportunity to kind of solve that, and then start leveraging what we've built with the OAN and OAN as a cryptocurrency to solve it in a new way that potentially makes it more fair for these stakeholders and gives more ownership to the individuals that are participating in the product. So that kind of thinking was throughout early 2020. And then we launched the first version of Moves in April of 2020, right as kind of lockdowns were becoming quite pervasive across Canada. We were noticing for a lot of rideshare drivers that their demand for services dropped 80% effectively overnight. So there was this huge kind of moment where these individuals started to really feel that friction of being on the fringe of traditional financial products, because they couldn't go to their bank for a line of credit if they needed it. And government programs at the time, since then they have improved, weren't not being like gig workers and freelancers were not eligible for them either, especially here in Canada. So we introduced a product that was effectively a no interest loan for these individuals to help them get through this period of time. And that was a nice foothold for us to start really working with our customers and continuing to build out the product from there.
Yeah, and I think, this issue has been seen across the border, what we call the 1099 economy in the US, where contract workers were not a recipient of the initial round of federal aid. And, this is something that definitely also on this side of the border was very much felt. So that is fascinating. Now, thinking about, moving kind of up the stack one layer on our framework and thinking about the financing environment. So of course, Moves comes out of your existing platform, right? And you as Aon. So before the rebranding, there was a token sale. That is my understanding how the platform started. What is your feeling about the current environment, financing environment for platforms? Token sales sort of in a way come back recently, even if not through the ICO process that we have seen more in the 2017 period, and instead now we're seeing more like venture capital-led deals. What is your feeling? And with respect to moves, do you expect there is going to be financing related just to the app, or ultimately this is just a constituent of the Aon platform, and so you're not going to separately finance it?
Yeah, I think to the first part of that question, I think just in my experience in this industry over the past couple of years, there's definitely always been moments where there's kind of almost like a new hot thing, right? Like a new way of doing something that a lot of new capital starts to kind of crowd around. And I think the one thing that I try and challenge for ourselves, and I'm sure you guys experience all the time at Prysm as well, is that while these things might be in the moment a hot thing that is an opportunity, the design of what you're putting into place, whether that's an equity structure or a token structure, has very long-term ramifications for your business and its stakeholders. These aren't designs to take lightly, and they're also really hard to potentially kind of unwind or move forward from. So I think number one, when someone is looking at their financing needs, you have to look at really like your business objectives and what is the business model that you're building as well. So are you building a business model where value accrues potentially to an asset like a cryptocurrency, depending on what your business is? Or is this really more of like an equity accrual structure where you're potentially putting revenue into a business? And then I also think you have to look at the realities of what environment your business operates in. So if you're a product that is potentially building financial services, you're going to exist within the existing financial regulatory structure. So you have to kind of balance all these pieces. So I don't think there's like a one size fits all. I think it's very unique to each individual company. For us, I think the big focus on our side in terms of kind of capital requirements is for Moves as a business. Like one of the big value propositions for us and our customers is providing them effectively a financial safety net. So if you're an independent worker, you can come to Moves right now in Canada and shortly in the US, and we'll provide you a financial safety net where you can kind of draw on a very low interest line of credit for you to meet emergency expenses or the challenges that you face with income volatility. What that means is for Moves as a business, we need access to debt capital in order to lend out to those individuals. So far, we've been doing that internally, and it's been great from a testing and experimental standpoint. But the next step is really to scale that out, because we're anticipating quite a bit of growth moving forward for Moves, both in Canada and as we expand to the US. So that debt capital pool needs to expand quite significantly. And what we're looking to do from a financing perspective is start leveraging the kind of crypto capital markets that exist to actually finance that debt. So that's something that we could definitely dive into now, or we can also kind of talk about as we go through the rest of the framework as well.
No, yeah, maybe let's hold on that. But yeah, I think to your earlier point, you're absolutely right. And this is something that, anybody who's worked with us has heard us saying that whatever decision you make on your financing, they need to be in line with ultimately what is going to be the business model. And otherwise, to your point, we've seen, unfortunately, too many projects 1, 2, 3 years later regretting some of the decisions they made, and unfortunately having a very difficult time to going back to investors and say, hey, actually, I do need to restructure the deal because this is no longer going to allow me to, progress with the project in the way that I want. So this is absolutely something that, we very much believe in, and the one size does not fit all is very important to keep in mind for anybody, listening to this. So thinking about, sort of moving to, what we call the incentive layer of our house, so where we think about transactions and how the market design is structured and information system that support this. Can you tell me a little bit more about, how the transaction function or moves? So you said that, you do provide, short-term, basically financing need to a gig economy worker. Do they need to provide any collateral for that? How do you, I think you made a great point that, gig economy worker are workers. They are often, they cannot access traditional financing products because the banks, will check the credit score and will not see a number that they like. So how have you guys gone around this aspect of sort of assessing the credit worthiness and then like how is the actual transaction structure between, you know, the moves smart contract and the worker using it?
Yeah, so I think we can potentially break that down into like two lenses. One is the moves, the way that like our product is designed to interact with our customers, and then there's kind of the other lens, which is how are we leveraging AON and the OAN blockchain to kind of facilitate some of that transaction as well. So on the move side, you're exactly right, which is kind of our thesis around our audience of independent workers was that the current way that they're being assessed by the traditional financial system is potentially inaccurate. So if you're just looking at the FICO score of an independent worker, first of all, your income through Uber or through Postmates might just not even be recognized. First of all, it's simply you're not even eligible for a product because that's your source of income. And then the way that a FICO score is assembled, some of the biggest parts of that is your employment status, the longevity of that income. So how long have you been in a stable source of income for? How long is your credit history? A lot of these factors are just kind of structurally different in the independent work economy. You are not employed. You might work on multiple platforms at the same time, and your income might change on a weekly basis. So that thesis was, well, we think that that is an imperfect way of kind of evaluating the risk of this demographic. Instead, let's evaluate risk by the way that they actually work. And the way that they actually work is through the information in their bank account and the information on their platform that they work on. So what we do at Moves is we look at not only their kind of income history, so their cash flow from these platforms, so how much they're earning on Uber or Lyft or DoorDash, and doing an assessment of, okay, does that cash flow potentially meet their debt obligations, which would include the Moves obligation and potentially other obligations that they're currently into. And then we also, and it's a new technology that we're building right now, look at the platform data that they work on. So we actually look at the information from their Uber profile, their Lyft profile, or their Postmates profile and say, okay, how long have you been on the platform for? What is your rating? How many miles do you drive? When do you currently drive? All of these data points are kind of more accurate to the way that they actually earn their income. So that's the way that we're piecing together kind of I guess like the reputation side of this in order to make a risk assessment. And then once we've made that assessment, then we actually transfer them the dollars through kind of traditional banking rails here in Canada.
And is the loan they get uncollateralized?
So right now the current product is an unsecured loan. So the individual simply we adjudicate the risk, and then they're provided with a loan and then a scheduled payback. In our kind of upcoming releases, as we move towards more of like a line of credit model with kind of a safety net structure, it'll still be unsecured, but there are kind of mechanisms that we're looking for in the future, some of which include crypto and AON that we think will kind of start playing a role there as well. But we can also kind of dive into kind of where crypto falls into that as well from kind of a market design perspective.
Yeah, no, I think that's really my next question. So you did mention that AON is going to have a function in this, and of course there's also the aspect of the crypto market becoming that source of capital as you rightly aim to grow this across potentially tens of thousands or hundreds of thousands of users. So can you tell me a little bit about how you think about that market design question? So you have, one side, this gig economy workers that want to access capital, and on the other side, you have the crypto market with, potentially billions of dollars worth of capital that could be yielded. So we have seen, and again, just this is for context for anybody listening that may not be too familiar, but like there is a trend, right, that started with, of course, Compound being, launched quite successfully, of creating this smart contract that match, sort of people looking for a yield and then people looking to borrow. Of course, up to this date, really, most of the effort has been within crypto, right? So with not a connection to the real economy, while these efforts really tries to bridge that. So I would love to hear more about what you guys are thinking in this regard.
Yeah, it's been a really interesting kind of experience because we're kind of coming at it from almost a different lens, right? Like over the past 5 months, we've had a product in market that is interacting with real consumers that have a demand for capital. They're looking for a loan, and Moves has positioned itself as a partner to provide that capital, and we have a mechanism by which we can assess that risk. And now the next step is, okay, how do we actually effectively kind of assemble that capital to lend out to this growing group of individuals across North America that want affordable like an affordable access to credit. So one path to that is to go to the traditional markets for debt and to work with institutions, to work with maybe kind of more early stage banks and find an opportunity to do that. And I think that is definitely a path that we could go down or might seek in parallel, but that there's some challenges to that. First of all, it's still an early stage kind of concept. So if you are going to be kind of proposing a new way of evaluating risk, you need a lot of time to prove that your thesis makes sense. And that means that you need a significant, like you need quite a large data set, and there might be restrictions that are put in place by that institution around the way that you do your adjudication or how much they're willing to lend you at a certain time. And it's likely that those rates could be almost too high for you to even provide your value proposition to your audience. So once we started kind of assembling those data points and understanding what the market looked like, we started to look at what we could do from the crypto perspective, because over the past year, you've seen all these individuals holding stable assets effectively seek yield and through various different mechanisms. And we looked at that and said, well, maybe there's an opportunity to leverage that demand for yield, but point it kind of towards a product that offers a different value proposition. And really our value proposition is that what we're providing individuals with a stable coin, starting with USDT, is the ability to deposit that USDT and earn a fixed rate yield in a loan that's actually going to an independent worker in the real economy that is using it to pay off their car bill or using it to kind of move forward and purchase an e-bike, for example. So it's a kind of an external, it's breaking up kind of how internal the current crypto market is for these kind of lending products and saying, well, there's a real demand here in the external world, and we can match that with the demand that exists in kind of the crypto capital markets. And in that way, provide affordable products to our independent workers while providing kind of a new compelling value proposition to crypto holders as well, because we offer something that is fixed. It is more of a predictable design, and it kind of has a different value proposition than what you might be looking for when you're kind of yield farming across various different projects.
And Sam, that is fascinating and definitely a very different, very unique, proposition, thinking about what is currently available in the DeFi space. So let's say that, I'm a holder of USDT. I have, $2,000 and decide that this sounds like an interesting opportunity. And I know, this is still in process, but what would be the steps for me? And would I be able to select? Are there going to be multiple contracts depending on the location, or is it like a single contract? And I know that you guys are not yet publishing rates, but like, can you give maybe a feeling of what would be the range of rates to expect?
Yeah, so for kind of the alpha, which we're planning to launch, so Moose Crypto, the alpha will launch in mid-October, and the first product is going to be a 50,000 USDT pool, like a loan pool. And there's kind of two core mechanisms with the loan pool. We have the loan pool, which is an individual like yourself could come in and contribute, let's say 2,000 USDT. And then we also have a collateral pool that is funded in AON. So AON holders, and Moves itself as an entity will actually be putting AON into this collateral pool to match 100% the loan pool, to provide some kind of safeguard or backing in the event that there is a default on the actual kind of total loan book. And what is happening is, instead of an individual, when they contribute their USDT, you're not kind of self-selecting specific loans. You're purchasing effectively a basket of loans that Moose has assembled over a period of time. So what it looks like today for the alpha is you would be contributing your USDT, and if you want, you could also participate with AON and participate in the collateral pool. And the term would be, you'd be locking up your USDT for 3 months. And in return for that lockup, you would receive a 10% like an APR. So 10% over that. So over 3 months, roughly 2. And that's what you would receive. And then at the culmination of that term, you'd be returned your principal plus your interest. The goal for the alpha is to kind of test out all these market dynamics, understand what the demand is, how do the yields work, the collateral pool versus the loan pool, and really learn a lot. And then also kind of start benchmarking, what do we think the growth rate will be on the Move side, and then start rolling out kind of multiple products, potentially in parallel or sequentially. So that could look like $100,000 a month, and then you have these rolling 3-month kind of structures, or we could do larger on a longer time horizon as well. So those are the next steps for us, kind of the learnings from the alpha that will.
And can you tell me a little bit more about the collateral part? So like if I'm an AON holder, I would be pledging collateral and I guess get part of that fee. Is that how it's structured?
Yeah, so the collateral pool will also get a yield.
Mm-hmm.
Some of the rationale for the collateral pool is that this offering is different than DeFi. It is not really like your traditional DeFi solution.
Mm-hmm.
These individuals that are participating with USDT are really kind of lending money to moves to then lend out to customers, right?
Yep.
And what that means is we know that we need to start proving kind of a track record, and as much as possible, de-risk the risks that do exist with that structure. So what we're doing is assembling an on-chain collateral pool in Aon that in the event that there is kind of let's say a default of those loans and Moves cannot pay its obligation, then that collateral pool would go to satisfy that loan pool. What Moves is doing as an entity to kind of bootstrap that is putting a balance sheet Aon into that structure to start kind of building a track record of that success. It's something that we're testing to show, like, can we help de-risk some of the structure and understand people's feedback? And then over time, the goal would be to start allowing more market mechanisms to take place where the market can kind of determine the need for collateral or its need for insurance, and it can kind of exist a little bit more in a free form structure.
Mm-hmm. Mm-hmm. And in terms of, because of course, like, it's very clear now you have the USDT part, which is, stable coin, and then you have the loan would be, I imagine, in Canadian dollars, but the Aon is a free floating currency, right? So what have you guys done or thought about doing with respect to some of these three ways exchange rate issue between Canadian dollars, US dollars, and Aon price?
Yeah, I think that'll be one of the things we want to really learn through in this first alpha is one of the reasons why we're not accepting like volatile currencies for the loan pool is because of that, is we don't want to have that exposure. So there is going to be a transaction cost of moving from USDT to Canadian dollars or US dollars, and we'll need to monitor what that is. And hopefully as we scale, it becomes, we also get kind of economies of scale there. But that's why we wanted to avoid volatile assets at this time, and then just lend out Canadian dollars or whatever local currency it is. On the collateral side, that's also something that we need to kind of like learn from in the alpha, is what is the kind of optimal collateral ratio, or what do people want to see in terms of the collateralization? It could become over collateralized in a way where we realize that there should be an over collateralization because of the volatility of Aon, and then that would potentially drive down rates on that product as well, like on the collateral yield. Or we could see that Move starts building a very consistent track record, and individuals are willing to take that risk, but potentially that risk requires more yield on the loan side. So those are the mechanisms. Right now, we're kind of putting out a first version, and then start opening it up to more market dynamics, but then also start just getting feedback as much as possible from the participants to understand what potentially were their blockers to participating, or what would they like to see if they wanted to contribute more or participate in the various different structures.
Oh, that's fascinating. And then thinking about the sort of the recipient side of the market, right? So there are existing large fintech companies operating mostly in developing countries that do like this personal loan. One is Tala or Branch, and they've been around for a few years. And one of the reasons why they have not been operating in sort of the US market especially are usury laws, right? So this idea, and I don't know if all listeners are familiar, but in each state in the US, there's a maximum amount of interest that you can charge for personal loans, and generally it's between 5 and 15%. So I know we talked about this before. How do you guys think about this issue of like sort of the regulatory part, right? Which of course, once you start dealing with the fiat world, it becomes a very key component. So yeah, if you can tell us a little bit about how have you dealt with the regulators in Canada with respect to like the interest, and like from the user perspective, if you can give an idea of what is the range of interest that they would be expecting to take on a loan.
Yeah, it's definitely been top of mind for us, and that's one of the reasons why we decided to kind of launch Moves in Canada to start. Is most of the team is in Toronto. We had a good understanding of the regulatory structure in Ontario and in the other provinces. And similar to the US, there's a lot of state-by-state regulation here that is kind of the key part of expansion. So we started off in Ontario and then worked to add in Alberta and British Columbia. And I think what we've definitely noticed is that a lot of the regulation is definitely built around kind of preventing very aggressive bad actors. So it's really important that we understand, how is that regulation designed? And then how do we design our product to make sure that we can be as innovative as possible in the business model and really support the needs of our customers, but not design something that is kind of incompatible potentially with the regulatory structure. So that's been kind of a focus of how we've been designing the economics of the product as well. But I'd say like top of mind for us when thinking about kind of like interest rates or these bad actors is we wanted to make sure that when we kind of build this business is the whole objective is to move independent workers forward in their financial health. And what that means is we can't be creating a system where these individuals are kind of coming to us and then getting into a cycle and we're not actually moving them forward. So the way that we've been designing our interest rates and designing the product is all around incentivizing and moving people towards that objective. So one of the products that we have out now, in addition to the unsecured personal loan, is e-bike financing. And we just heard that was a huge blocker for food couriers, especially during the summer, was I have to spend maybe $3,000 to get an e-bike, but I know that if I buy that e-bike, I'm going to earn maybe 30% on a daily basis. So access to capital to kind of make this capital investment in your own business was a gap that we saw. So we rolled out e-bike financing at 0%. So an individual could finance an e-bike with us, start earning more money because of it, and then easily pay off their obligation with us. So it's all around kind of aligning the products towards their long-term success, not trying to kind of force them into a cycle that they're not, that doesn't actually help their financial health.
And I think that's a key point to highlight, because it has been a bit of criticism against some of these apps mostly working in the developing world, where people have been taking a loan one app to pay the other app, right? And sort of this cycle, which to your point, I think it can be actually counterproductive to the idea of financial empowerment for people who have been so long on the marginal side of sort of the society in terms of financial inclusion. And I think that you made another great point there about the e-bike, and I think this is something that you had mentioned to me before. Sort of like you guys also assess the investment people make, quote unquote, in their, I really like this idea of their business, like themselves. So like in terms of like buying a car that has lower mileage, or again, getting an e-bike, because that's gives you a very good idea in terms of like the commitment towards the profession that they are having. And, to your point, it's going to also help them earn more, which ultimately leads to a, very strong history of repayment on their uncollateralized loan. So are there any other similar data points that you guys look at in terms of like, asset commitment or so to speak?
Yeah, I think that's part of some of the longer term thinking is as we roll out kind of this safety net where effectively a line of credit that you can access and you have peace of mind that you have money if you need to access money. There's going to be let's say use cases of that safety net that are very like practical investments in your own business, let's say, but it's very platform specific. So e-bike is a great example of one that made sense for food couriers. Is you're, let's say, a student, or you were doing rideshare before and demand went down and now you're like on a pedal bike. It's just very clear that if you can make this investment, not only are you going to make more money, you'll also be like less tired at the end of the day. You'll get to wake up earlier and you could look for jobs on the side. It has all these kind of like other repercussions in your daily life. And we also know that you're likely to be retained longer in the gig economy, which is really helpful for us. We know that you're going to stick around longer versus just dropping your pedal bike. The other ones that are, I'd say, early, but we've noticed it's a similar pattern, is you see this in Uber, where someone kind of comes in and does Uber X, and then they look at maybe financing a car that could be doing Uber XL and saying, okay, well, I'm spending the same amount of time on the road. Can I make more dollars per hour with like a better vehicle? And then I think when you look in the freelancing ecosystem for people that are doing more like higher skilled work, you see people making investments in their own skills. So someone's saying, okay, I'm going to buy a Coursera course, or I'm going to invest into learning a new programming language, which then allows me to add that into my portfolio on Toptal. And that skill is $50 more an hour than my other skill. So we're definitely also seeing those trends. So as we start expanding kind of across the independent work spectrum, there will be these opportunities for use cases, I think, that we can pull down and kind of describe and package for a way that people can use their safety net to make an investment in themselves.
Yeah, and I think it's fascinating. Also, you could almost provide guidance as well, right? Because you're going to have the data on hey, maybe taking the Coursera course versus the other course, it does provide, and you do see it in the income, a better
Exactly.
ROI, right? And so
Well, this is exactly, yeah, I'd say this is exactly where like the network effects also start to take play, right? Is moves over time starts to build up a membership across North America. And every time we add a new member, we have more data, but we also have more like purchasing power as a collective, where now our membership, let's say it's 100,000 people or 1 million people, our ability now to effectively negotiate on behalf of this user base towards maybe that's a better pension plan, or that's a better HSA account, or different types of like governance systems start to present themselves as you kind of start building out this base. So we think there's a huge opportunity to take kind of these isolated independent workers, and just because you're independent doesn't mean you're alone, and giving them a community and giving them a platform by which they can all succeed collectively better. So that's been kind of the other thesis that we've been writing about, and looking to really leverage crypto from that perspective is the Moose Collective and our thesis around ownership. And I think we'll get there. Yeah.
Yeah, and I think this is a very good segue on sort of the token part, right? And we talked about it before. AUN is going to have a central part in this. I think about it like how credit unions came about 100 years ago, and how co-ops have existed for a long time in different sectors. So can you tell me a little bit like, what does AUN constitute within Moves? What are going to be the functions? And like how is this going to be almost like a COP 2.0 or 3.0, depending on, how you want to define it?
Yeah, I think so. Part of our learnings of just being in this industry for the past couple of years is we've seen the amazing behaviors that stakeholders have when they become owners. And this happened when AON launched. All of a sudden you had tens of thousands of individuals all over the world that were all of a sudden advocating for the technology, building on the technology, securing the technology. And this is just an amazing thing that is kind of created when individuals have this economic alignment. So what we want to do with Moves is kind of leverage some of those lessons learned, and let's say, how do we introduce ownership into the gig economy, and how do we introduce ownership into the Moves ecosystem? So there's going to be a bunch of stakeholders for Moves. That includes the independent workers themselves. It includes the platforms that we might work with for distribution, so the large gig platforms. And then it also includes the capital providers that are providing debt in order to kind of facilitate the offering. So how do we bring together these disparate stakeholders into a common system of ownership where there's like long-term economic alignment for them, where they're all kind of pointing in the same direction and they earn back value for the value that they put in? And we noticed a lot of that language and kind of design with co-op structures or credit unions. And we saw, well, there's an opportunity here to leverage crypto in that way, crypto as that asset. And instead of the kind of traditional model where your co-op share is like a piece of paper that is completely inflexible, closed within the ecosystem, you can introduce the magic that is crypto as this open asset that is composable, that you can design different things around, you can plug it into different experiences, and really kind of create that kind of digital co-op opportunity. And this is something that some like other like leaders in the ecosystem have been talking about, like Jesse Walden. He has a thesis called The Ownership Economy that he's been running his fund, the Variant Fund, based on. And it's just really, really compelling, which is that crypto assets can kind of introduce ownership for these individuals. So that's the thesis for us with the Moose Collective, is effectively a co-op structure that surrounds the stakeholders within Moves and providing these stakeholders ownership through AON as a cryptocurrency. And what that means practically is, if you're an independent worker and you're using Moves and you're on our safety net product, when you're providing value to Moves, so that could be paying off your safety net early, or referring a friend, or creating content, you're going to earn back some percentage of value in the form of AON. And you're going to start building your ownership in the collective as you continue to use the product that is towards your best financial interest, but also as you're adding value to the organization itself. And what we believe that ultimately does is create alignment amongst these stakeholders, but also introduces all these amazing kind of owner type behaviors that we think will accelerate our kind of speed as an organization in comparison to like the traditional competitors, where the idea of ownership and AON kind of becomes our growth engine in that way, where it's the asset by which people are rewarded to refer their friends, or they're incentivized to do these behaviors that actually help monetization in the product and help them solve their own problem. So it's kind of this amazing, I think, design space from that perspective that we're really excited to dive into, and we'll start introducing into the Moose product towards the end of this year as well.
Mm-hmm. And so, Sam, just to understand, you know, right now Moves is in its alpha phase. Are the people participating right now receiving already Aon? Will this be rolled out later on? Like, what is the current state? And also, I think an interesting additional question is like, how difficult is to educate gig economy workers about cryptocurrency, right? I mean, it might be a, you know, a concept that they're not yet familiar with. So how do you guys are thinking about this challenge?
Yeah, so to the first one, what we're working on right now is setting up the product with the right experience to start introducing this type of mechanism. Mm-hmm. So we're working right now on a new release of the product towards the end of this year, which will introduce a kind of a user experience and a value proposition where putting in this mechanism of Aon and this ownership concept makes sense. It makes sense in the user experience. So that's kind of the upcoming milestone. So towards the end of this year, we'll start seeing these independent workers earning Aon for specific actions and using the product in certain ways. And that'll be like an ongoing, effectively experiment where we're saying, okay, what are we rewarding? What makes sense for the business? What makes sense for the individual? How are they using it? What do they want to use it for? All of those, that's kind of the cycles that we're going to have to run as we start rolling that out. To the other side of the question, sorry, what was it again? The other
it was that on the education side. Right?
Yeah, that is a really good question, and it's something that we're working really hard on. Is how do we explain, first of all, this idea of kind of a digital co-op that in itself is new, and then the idea that the asset that gives you ownership in a digital co-op is a cryptocurrency. That's also new. So what we're trying to do is start testing effectively product marketing with our audience. So introducing the idea of like, what does ownership mean to you? If you were receiving ownership, what do you think that would look like? And just going through this cycle of understanding, first of all, is this something that is valuable to these individuals? Would it properly kind of reward these behaviors? And then how do we need to talk about it? Do we need to talk about it in a more traditional kind of share-like language, or at least use those analogies? Or can we maybe go very like not aggressive, but can we be a little bit more progressive and actually talk about it more like a cryptocurrency and start educating people about cryptocurrency? I think we don't know what that looks like yet, but we're not going to arbitrarily decide. We're going to actually talk to customers every day and test this language and understand what works for them. And that's just the cycle that we'll go through in the coming months.
And maybe one more sort of angle to this. Have there been any questions or maybe concerns about the regulator view of, you know, putting digital asset crypto in the hands of people, or, you know, is this ultimately in Canada? I mean, I am not personally familiar with what the situation is in Canada from a regulatory standpoint, but is this a concern at all, or you guys are relatively comfortable with it?
Yeah, I'm not an expert either, but I think that the way that this is being designed is that this isn't an individual purchasing this asset. They're doing an action and they're earning it, and they're contributing some value into a common enterprise. So I think that is definitely a question that we'll have to continue to explore, and the regulatory environment in general is still kind of evolving quickly around these questions. But yeah, that's kind of the current thinking.
Okay, no, great, good to hear that. So I think, you know, this is all fascinating, and I think, you know, if we think about, you know, co-ops, of course, the question of governance comes about, right? I mean, I think about, you know, there's of course many different type of co-ops, but if we think about Ray or other type of store that have been like, you know, basically customer owned for 50, 100 years, you do get, and I think with Ray, it's like if you spend $10 for the membership, you spend over $50 in a year, you get to vote. And then they really run pretty much like traditional company. There is a board of the co-op that selects the management, and then I think they are on a 2-year rolling basis, etc. In terms of the governance of the co-op? Like once, let's say, you have 10,000 members in Canada, have you guys given it some thought of how that would be run? Would there be, again, some sort of an elected body, or, I know there are now a number of digital platforms that offer sort of governance-like mechanism in a facilitated way. What have been the thoughts so far from a governance standpoint?
Yeah, it's definitely something that we want to progress forward on and introduce across kind of different elements of the Moose Collective concept. So I think it's important to look at maybe the different stakeholder groups and like what governance means to them, because one of the stakeholder groups is capital providers. So participants in Moose Crypto that are providing debt capital will effectively earn ownership in the Moose Collective as well. And what that means is that there's going to be kind of a unique set of governance around that market in its own design. So when we think about, like we were talking about earlier, what should these collateral ratios be, or how the yield should be determined, or what assets should be allowed in it? These are, I think, governance structures that a lot of other networks have also implemented as well. But there's definitely, I think, a fit there from that perspective, where these are stakeholders, they're stakeholders in the kind of the capital markets side of this. There is an opportunity to give them a voice and decide how these should be structured and have an opportunity to kind of participate in that. When we look at the independent worker side, so the actual customers of Moves, there's also, I think, an objective there to start introducing governance where it makes sense. And I think what we're trying to understand now is what are those, what is the kind of the set of decisions, whether it's within Moves or within the broader gig economy, that we think we can start introducing kind of governance into. So one example is if we start moving into a kind of a stage of growth where we have, let's say, 1 million or 2 million independent workers that are members, starts to represent a pretty decent cohort of the gig economy, potentially in specific states. And all we're hearing about every day is regulatory decisions around the gig economy, or platforms like Uber making certain decisions around what do their drivers need, or how would they like to be delivered. And I think we have an opportunity as Moves to lend a platform to provide that voice. And if at minimum, it only might provide some type of signaling, but at a maximum, it actually could start looking like an ability to kind of vote on some of these decisions, or at least kind of represent these individuals at kind of a scalable way. I think there's also opportunities on the Move side when we're looking at what products we want to offer, or specific jurisdictions potentially that we want to move into, or even looking at pricing and things like that. I definitely think there's opportunities to start involving these users in those decisions. I think that the first step is getting to kind of a bit of a critical mass, understanding what's important to them and the way that they use the product. And then we can start kind of in an experimental way, start introducing these things and making sure that they're adding value to the overall ecosystem.
No, and I think that's key. I mean, we have seen, like a big push towards DAOs in recent months. And of course, that is very much in the spirit of our industry. At the same time, once you have launched the DAO and indeed the community has to run the thing, it's often not so easy for the community to do it if you have not put in place in the right timeline all the different pieces, right? And I think to your point, different stakeholders are also different level of interest for different pieces of the platform. So I think it is something that needs to be carefully thought through, but at the same time, to your point, if you do reach the type of numbers we're talking about, I mean, you could have a real power, quote unquote, versus some of the traditional centralized, gig economy employers in a way that these workers have to deal with every day.
And that's why we're kind of the early thinking around what membership looks like in the collective. It kind of has, I think, two mechanisms. One is, let's call it like the amount of ownership that you have. And the second is kind of what class of member that you are. So for example, like MEC here in Canada, and just yesterday they got sold to like a private equity firm in the US, but they were Canada's largest co-op. And when you joined MEC, it's effectively the Canadian equivalent of REI. And when you joined MEC, you would get a share, like a $5 share in MEC, and that was a particular type of member share. And then depending on your spending in MEC on an annual basis, you would get different kind of dividends or distributions, right? So, exactly. So, and obviously they would need to make a profit, but there was kind of a pro rata. So then when we look at what that means for us in the Moves Collective is you have different member classes. Those could be capital markets participants. It could be distribution partners, like the gig platforms themselves, the Lyfts or the DoorDashes. And then you also have the independent workers. So when you're making certain governance decisions, I think there is importance to kind of not have too many universal decisions, because of the impact isn't universal. So you're going to have decisions on the capital markets side that make complete sense for those participants to pay attention to, but for the independent worker, they're not knowledgeable about that, and it might not make sense for them to participate, and vice versa. If we're talking about maybe if we want to move into, let's say, California, or what new platform we might start working on for distribution, should the capital market side be as involved in that? Or if we're talking about what new kind of value-added feature we're putting into the product. So we're trying to understand what that would look like and how do we segment these things, and then provide some type of weighting based on how much value they've actually provided into the collective. And that's kind of what AON starts to represent, is this kind of unit of ownership, where if I'm an individual who signed up for Moves and used it for 1 month and then kind of churned out, I think you have there should be a different weighting to your decision in governance, or the way that you participate in governance, compared to an individual who's been using it for 5 years and they've been completely active on it. So that's where kind of that weighting comes in with AON as an asset. So it's very early in terms of our thinking there, but that's kind of some of the ways that we're looking at using these different mechanisms to hopefully move towards a governance system that is a little bit more kind of fair.
Okay. No, and I think lots to unwind there, and I think it's a lot of potential thinking about the broader trends in the economy and how the gig economy is here to stay, and it's going to expand, right? And I think that there's going to need to be, for many of the things that you guys are trying to put up right now. So I know we're almost at time. So before we leave, I wanted to know, for people who want to learn more about Moves, about the Open Application Network, for any people that might, be involved in the gig economy, what steps can they take to learn more, get involved? Are you guys looking for particular profiles of people? Like what can they find more information, and what are you looking for?
Yeah, I'd say like the best starting place, if you're interested in learning about Moves and what we provide to independent workers, is to go to movesfinancial.com. So there you can kind of see the current state of the product, what we offer, how we talk about it. And that's where we'll continuously be providing updates. So as we roll out new releases, as the offerings kind of mature, that will be the place to see that progress. On the other side is the launch of Moves Crypto. So Moves Crypto will roll out in mid-October, and that'll be available for USDT holders to start earning that fixed yield. And then it's also open to AON holders to provide collateral and also earn a yield. So depending on kind of when this publishes, like today, so September 16th, we'll be launching a blog post explaining the Moves Collective, Moves Crypto. And then over the next coming weeks, we'll be announcing specific details as well. But we're really excited to get that and have people participate from both sides of the market.
Fantastic. Well, very much looking forward to that. And again, best of luck on all the upcoming launches, Sam. Thank you again for joining us for our House of Blockchain series. And, thanks everybody for listening today.
Thank you very much.